Candlestick charts reveal much more clearly that there may have been a stabilization or a support area occurring in the markets, such as the Dow. Notice the sideways channel seems to be supporting off the 200. Then there's a resistance level right here. Note what's happened over the last couple of days of trading. A bullish engulfing signal that bounced up off the 200-day moving average again and closed above the T-line, followed by a gap up in the Dow. Now it's nudging this upper trend channel with stochastics coming up. A breakout through this level would give you good, clear indication that there's been a change of the investor sentiment that's been bobbing around over the last month between this range because of the indecisive nature being created by the positive or bearish tweaks and information about the tariffs over that time frame. Logic says that if they open positive and break out through this level, now there's a change of investor sentiment. It's going much more positive. You can also see visually the sideways channel in the NASDAQ. It also gapping up today, kind of heading for this level, making it very simple that if they break out through the 50, which has been a resistance level at the top of this trading range, that tells you there's a new dynamic or a new strength in the investor sentiment. That would be a very bullish indication to start having the portfolio oriented well toward the bullish side. There is another change of characteristics in the big stocks, the biggies like Amazon, Apple, Nvidia. Nvidia, as you can see, did a morning star signal with a doji that formed right smack dab on the 200. The gap up today by itself would be your best friend signal. A doji followed by a gap up, considered your best friend because not only does it indicate a very strong probability you're going to be in an uptrend, but the strength of that uptrend usually is fairly strong. So if you use convergence analysis, meaning got a morning star signal with a doji gap up off the 200-day moving average through the 50, use basically the T-line as support. If it starts moving positive, confirming this signal, we essentially have a J-hook pattern setting up where wave 1 and wave 3 should be approximately the same magnitude. That creates the opportunity to be buying stocks at the appropriate time, again on bullish confirmation that the markets aren't falling out of bed tomorrow, that any positive trading from here has a high probability of moving up strong, giving you the opportunity to either buy stocks or a multiple option strategies that can take advantage of that price move based upon knowing what the magnitude of the move is likely to be to increase the probabilities and minimize the risk of being in a very successful trade. The visual analysis of patterns setting up are dramatically improved when you can see there's basically in lows, they had a bullish engulfing signal right here off the T-line and trading positive, breaking through this level, giving you the prospect of a wave 1, wave 2, wave 3 J-hook pattern. CRM, Salesforce, same scenario. Big gap up, pull back, consolidation right back here to the 50-day moving average, but they couldn't close it below the 50. They couldn't close it below the T-line. Now bullish confirmation, giving you a wave 1, wave 2, wave 3. The patterns produce high probability trade results. That's the reason we're recognizing patterns, because the Japanese rice traders have identified them for us over the last 400 years. Not because the pattern itself is something clever, it's because human nature works the same way time after time, creating these patterns. That'll be it. We'll see you in the chat rooms.